Hello and welcome back to the channel. And I hope you all are good. Today, the next chapter is on the stock market index. We'll be learning about the different types of stock market index and what are the role in the stock market. Stock market indexes are normally named. Some of the examples like are Next 50, Next 50, Nifty 100, Nifty 500, S&P PSC 100, S&P PSC 500, S&P PSC small cap, mid cap, and so. Usually, a market index tracks the market movement by using the prices of a specific number of shares chosen as a representative sample. Most leading indices are weighted by market calculation to take into account that the fact more the number of shares issued, greater the number of portfolios in which they may be held. Stocks included in index are also quite liquid, making it possible for investors to replicate the index at a low cost. It means suppose uh, all the stocks in the market are going up, then usually the index is also going up. If the index is coming down, it means the stocks are also going down. So it's a way that buyers and sellers, the way they react, in similar way, the index is also reacting. Some of the Indian stock market indices types and examples will be, I'll discuss it in the latest stages of the chapter. Some of the stock indexes, which I have already said, are the Nifty 50. Nifty 50 consists of around 50 top blue chip companies in India. The summation of these companies makes a Nifty 50 index. The way these 50, Nifty 50 stocks react, similar way the Nifty of Indian market also reacts. In a similar way, as I had told about Nifty or Nifty 50 or Nifty 100 or BSC mid cap or small cap indices, similar way in USA also there are in other countries in the Western world there are indices like known as the Nasdaq, DIG or S&P index. So different countries have their own indices. Similarly, the way India has, other countries are also having their own indices. Our stock market is mainly run by two exchanges known as the PSC and the NSE. The NSE is the National Stock Exchange and PSC is the Bombay Stock Exchange. Here, the main investors are the mutual fund investors and the FIS, the DIS, the individual investors or HNIs. So these people invest in the company through these PSCs and NSE exchanges and they earn a living for them. It means they trade the stocks here. They trade the ETFs. They trade the mutual funds. So one by one, let's see what are these type of shares or equities or mutual funds. Mutual funds are the ones which are issued by mutual funds companies only, and the type of people who invest in this are institutionals and individuals. The medium of this mutual fund is directly issued by mutual funds or any stock exchange. The regulator of mutual fund is the SEBI. Mutual funds are investment vehicles that pool together the money contributed by investors, which the fund invests in a portfolio of securities that reflect the common investment objectives of the investors. That means they take money from the people, they invest in a pooled security, and the returns are reflected in types of NAVs, NAV. It's a very popular thing, known as the ETF funds or known as the exchange traded funds. These are also issued by the mutual funds, and these are their investors. The people who invest in this are institutionals and individuals, and these are directly issued by mutual funds and stock exchanges. The regulator of ETFs are also SEBI. The ETFs is an instrument vehicle that invests funds pooled by investors to track an index. Example, you invest in a Nifty index, it will be known as Nifty ETF. If you are investing in a gold indices or ETF, it will known as the gold ETF. So they make a basket of the funds and what are the index, they are the direct reflection of the indexes and the ETF. So ETF is less risk and they go with if the exchanges are high, if they're going up, this ETF traded funds will also go up. If it is down, this will also come down. Today we have learned about different type of indices, and along with this, we have come to know about what is mutual fund and what are the ETFs and other type of funds which are being traded and we normally don't know. In the next class, we'll be learning about preference shares, hybrid shares, role of convertible bonds, and many other. I hope this video is clear. If you have any doubts, please put it in the comment box. Till then, take care. Have a great day. Thank you.